Any other sectors that you are bullish on at this point in time that could, perhaps deliver healthy return?
Yeah, financials, I think itself is a sector where there is a large opportunity present. So even when you look at it from a top-down perspective, and let's say look at the full earnings picture of India, all the stocks listed together, 40% comes from BFSI segment, which is a very large chunk. And out of that, if you just separate lenders, which contribute about 33% of the overall bucket, you will see that they are still, printing in growth numbers, earnings growth numbers between 18 to 20%, which is a very healthy rate. I think this rate will certainly, remain above 15% or so, at least for the next few quarters, which I think is going to be a big source of, earnings growth. And when you look at this sector, it has got three very important things going in its favor. One, as I said, the credit growth numbers are very, very strong. We are seeing 15-16% credit growth. Our estimate is that we will continue to see credit growth between 13 to 15%. Second is balance sheet position for most of financials are extremely strong. For example, NNPA ratios of large banks are nearing a 2-decade low, which is a very strong position to have. And thirdly, I think there is a widespread revival which is happening at the consumer level, which has been a K-shaped recovery that I think is converging slightly. That will also help banks with stronger and more smoother trajectory going ahead. So for lenders and financials is very, very important opportunity. Second sector which I think has opportunity is healthcare. There, I think if you split the healthcare sector into three buckets, which is US generic drugs, Indian companies, which is Indian branded pharma, and third is the healthcare, support system, which is hospitals and path labs. Within these three categories, I think there are a lot of opportunities in each of these segments. We track about 97 stocks in totality, and if you do a historical valuations analysis, 2/3 of all these companies, about 16 number, are trading below their long-term average price to earnings multiple and average EV to EBITDA multiples. So, which is a very attractive proposition. This sector has a large margin of safety, and I think the earnings trajectory is also improving. For example, for US generic companies, there is a higher market share which we are witnessing. Drug shortages are now leading to an end to price erosion, which is also very positive for these companies. So, in totality, I think this sector is probably placed at a good standing in terms of both valuation. Plus, if the growth comes back, I think it will give you good investment opportunities.
If you like the video, do like, comment, share, and subscribe.